What's up, everyone? Excited to give this video today about BioCell Therapeutics, which, for those that don't know, is a company, basically that has the mission of creating these new therapeutics to help the world's, most deadly diseases. So it's a pretty awesome company in terms of messaging. But in this video, first off, this is not financial advice. Please do your own research in D&D. In this video, I'll be going over the search trends for the stock. I'll be going over the technicals and give a price prediction for shares. I'll go over short interest. I'll cover the fundamentals, and then I'll dive into the financials. So with that being said, let's jump right in. So for this company, we saw search volume top out at about in early 2020, and we're only at half of that max search volume for the stock. So this tells me that, retail chatter still has a long way to go in terms of upside, and anytime you have a stock that has a significant amount of their investor base from the retail space, well, that just makes the company more and more susceptible to the whims of the retail investor. And, this is basically a chart of, retail chatter pretty much. So we're only half of that peak retail chatter. Therefore, I believe, there's still a lot of room for upside in terms of, retail traders talking about this stock. So I think, potentially if retail sentiment and talk were to spike back to prior highs, well, that would be a significant tailwind for the stock. So just wanted to point that out. With that being said, let's dive into the chart and give a price prediction. Shares have bottomed out at about $6, which is where shares had bottomed out in 2019 before that massive run. It's also about where shares had bottomed out in early 2019, not the initial bottoms, but it's where we consolidated after the bottoms. Really do see this $6 level holding for the stock, and good sign to see it kind of hanging in there. Obviously, we moved lower off of that news that there was some data transparency issues. Who knows if that's really true, and I'll cover that story in a bit. But first off, so we held this support level, and now we're looking to move higher. I do believe shares could likely move higher to about $20 over the coming weeks, and that would just simply be a move up to the 200-day moving average, which likely would act as some resistance. And in terms of a major resistance level besides a DMA, you could call this $23 level pretty significant resistance. It's where shares had topped out in 2023. It's also where shares had topped out in 2022 in March, and it's where shares had consistently consolidated towards the end of 2021. So all that being said, I do believe, that this support level holds, and we likely come up to this resistance level, which coincides with the 200-day moving average at about $20 to $23, and we consolidate a bit around this level. So also, shares are oversold according to RSI, which could help lend additional support for the stock. So with all that being said, I do think shares likely continue to move off of the support level. My price prediction would be for about $20 in the coming weeks. So with that being said, let's take a look at some seasonality trends. So this screen right here shows me the average return by each month. So for July, you can see that on average shares declined 4.6%. August, same thing, shares decline on average. Same thing for September and October. So really the seasonality trends are in the favor of the bears. And then when we take a look at short interest, you can see here days to cover is 8.3, and we have a short percent of float at 23%. And the short interest increased 23% over the past 2 weeks. For those that don't know, basically we get new short interest twice a month, so pretty much every 2 weeks. And for the last month, the last half month period, short interest actually increased 23%. So interesting there. And then days to cover, this is a very important number when we're trying to determine the likelihood of a short squeeze. So 8.3 tells me that there's 8.3 days of average volume. That's what it would take, 8.3 days of average volume it would take to cover the amount of shares that are sold short. Typically, we look for this number to be over 10 to, kind of signify a strong likelihood for a short squeeze. But given we're pretty close here and short percent of float is pretty high as well, over 20%, I would give this a grade of about a B to B plus in terms of likelihood for a short squeeze. So keep that in mind. And then this was that store that I was talking about. So shares obviously have been falling off a cliff after integrity issues about the firm's Alzheimer's drug. So to be fair, this is a little bit of it's a little bit of conjecture. It's not a firm. We don't have the SEC suing them or anything. This is just a report. So BioCell here plans to seek a potential marketing application for treatment in the second half of 2023, subject to discussions with the FDA, of course. So we're still waiting for that. We're waiting for this drug to obviously, come to the market. But these questions about the integrity of their data is for sure, looming over the stock and looms, over the potential FDA approval of this drug. So not the best news here, but I do want to stress that this isn't very firm yet, and we're still waiting for more information. But it is worth noting that the FDA has also found issues of non-compliance at the site where the same principal investigator enrolled approximately 40% of the subjects to the study named Tranquility 2, the company said in a regulatory filing. So the FDA has been showing, has been, kind of signaling some issues here, which is nothing to sneeze at. But we haven't seen, any lawsuits or anything firm, anything saying that this Alzheimer's drug was complete fraud or anything like that. But obviously, this isn't good news. The conduct of the principal investigator at the study has led to concerns regarding the timelines of reporting a serious adverse event in the placebo arm. BioCell said it plans to launch an investigation into the issues and warned that the developments would impact its plans to seek approval for the drug. So obviously, this is going to impact the timeline and everything. However, Tranquility 2, targeted at older adults with mild to moderate dementia, has reached the primary endpoint for B-cell 501 at the 600 mcg dose. The study, designed to assess the 2-hour change in positive and negative syndrome scale excalatory component PEC as a primary endpoint, indicated a statistically significant 39% reduction in PEC score based on compared against the placebo. So this drug is definitely working. It's just will the FDA let things kind of go through given all these question marks? So that is obviously still up in the air. We don't know what's going to happen with this. But from where I sit, it does seem like this is an issue that could get solved. But we will see how this plays out. And then let's take a look at some financials for the company. So we can see here that the company obviously doesn't make any money, but EV to sales is 55 times compared to the sector median of 3.6. Pretty bad. And then when we look at price to book ratio of 6.15, honestly isn't horrible for kind of an R&D type of healthcare stock in the biotech space. That's only worth 3 times as worse as the sector median of 2.1. For those that don't know, price to book ratio is basically just puts the market cap relative to the book value of the company. So this basically says that the company's value is 6.15 times the assets on its balance sheet, and that could be equipment and property, so very firm assets. And then when we take a look at profitability metrics here, we can see that BTAI actually has a gross profit margin of 95%. For those that don't know, that is simply revenue minus cost of goods sold. So that basically tells you that they're making 95% on anything that they sell. So that kind of signals that if they're able to kind of grow their sales and grow their revenue, well, the company does have a pretty clear and easy path to profitability. Maybe not easy is the word, but it's at least conceivable. And then when we look at cash per share, the company has $5.70 per share in cash, which is pretty good when you consider that the company trades at $10. So that's basically half of the market cap in cash, which I would say gives the company a pretty significant floor and should help, investors feel some safety in, given the cash position. And we could also see here that this 570 level was about where shares had bottomed. So kind of interesting to see that shares are kind of bottomed right once we got into parity with our cash per share, right? Who's not going to buy a stock that has more cash per share than it does than it's trading for. So that is worth keeping in mind, that that 570 level is more psychological as well as technical support, given that they have $5.70 in cash per share. But with that being said, let's take a look at revisions. So this shows me what Wall Street is thinking about for the stock. So this tells me what analysts have done over the past 3 months. So we've seen 5 different analysts bring down their EPS expectations and 8 different analysts bring down their revenue expectations. Well, this tells me that Wall Street is becoming more and more bearish on the stock. Obviously, the recent news definitely didn't help. But this kind of gives you a good gauge on what Wall Street is thinking, and they definitely have switched to a more bearish tone over the past 3 months. So worth noting there, obviously not the end all be all, but keep that in mind. So with that being said, technically, it does seem as if the stock will likely continue higher. Obviously, do your own research in D&D. And then short interest wise, I would give it about a B or a B plus in terms of short squeeze likelihood. And then obviously this news event is very bearish for the stock. Data and integrity issues are never good for a company seeking FDA approval. And then the company still has a ways to go in terms of valuation, although the price to book value doesn't look bad. And then really the saving grace for the stock is the cash per share. It looks very healthy at $5.70, which is almost half the market cap. And then we have a gross profit margin at 95%, which is probably my second favorite financial metric here for the stock. Very good gross profit margin, well above the sector median. So awesome to see how profitability looks. And as I said, Wall Street is becoming more bearish on the stock. So you add it all up, I think BTAI is a solid stock and definitely is worth your consideration and research. So with that being said, I will end the video there. If you got some value from this video, please leave a like. We post company breakdowns and important market moving news on this channel on a daily basis, so make sure you are subscribed. If you would like to receive my daily portfolio moves, my exits, my entries, and see how me and my team of analysts are trading the markets, join the Discord through the link in the description below to get our free 7-day trial. Also, if you would like to join our free daily newsletter, sign up to our Substack, which is linked below as well. With that being said, good luck everyone. Happy trading, happy investing.